Look behind me after I put on my Harry Potter cloak and let me know if you think this looks bullish or not. Take a quick look at bottoms, 2013 or 2015 bottom, 2018 capitulation down at 3,200. Coronavirus, gray line, all used as support. Zooming into this part, something is not like the others, and it's namely due to the idea that all those other instances were during a 12-year completely up direction stock market. Every single downside movement that the stock market had since late 2008, early 2009 was met with a V-shaped correction, and Bitcoin was born during that 12 years of prosperity. And you can very clearly see here that something different is happening. And my multiple, let's see, about 3 videos in a row, my last 3 videos, I have mentioned different reasons why 21K is very important, or about 21.1. And look at this. I haven't used this one yet. And look where this is coming in at. The same gray line is right at 21.1. In addition to that, on a very, very short-term time frame perspective, before we get going in here, I was trying to give everybody a heads up on what I expected of very choppy price action, specifically not to become volatile until roughly Wednesday of the following week. So Wednesday hasn't come yet because that's when FOMC and CPI data comes out. FOMC minutes and CPI data, and it's going to be Wednesday, Thursday, and Friday, a bunch of high impact economic data. So let's go over that real quick to see how that's turned out. A lot of liquidity, or just people's liquidation points and their stop orders for super high leverage, just normal leverage. A lot of those orders get piled up here under an obvious level, and then the big money, they have their bots and algos that can see that in the order books, and they just go get it and then go the other way. And I was speaking more in line of the October open candle is going to be the swing down, the thing that is going to initiate price downwards, but it's got to go below it and use it as resistance and then break the low. You can go ahead and watch my most recent video on that regard. But I thought it was more likely that price would swoop down to about 19.3, just under that line, and then charge back up and keep going sideways over the weekend. So let's go ahead and take a look real quick at what price has done so far. Volatility has not spiked yet, right? However, if I put it on the 15-minute chart, which I believe I was on there, let me make myself a little smaller or invisible. Harry Potter cloak once again. You can see that price has simply swooped right below the October candle. See how it's labeled here? October candle open, swooped right below, and now is using it as support. So in that video, I mentioned it's got to go below it and use it as resistance. And I said, I think over the weekend, since I don't see an initiation of volatility, I think it has a strong chance of going just below it around 19.3. It went down to 19.336 and has come back above it. However, if you do see that starting to be used, the October candle open, clearly labeled right there, what it is and what price, you can go ahead and assume that there is a chance that volatility will increase before Wednesday through Friday of next week. So keep an eye on the October candle line. And then to the upside, the other easy line you got is the previous month's open. Like, you need these two on your chart. And as you can see, I've been stressing this. I mean, look how, look at this. So you need these two lines. It's very clear. Look, September open, boom. October open, boom. It's getting stuff exactly. I stress, if you're new to my channel and you haven't seen me guide people on what to put on the charts, right now, those are your 2 best guides. So if you're new, go ahead and hit the thumbs up, hit subscribe with all alerts, and let's go get some Bitcoin. We're going to mostly cover long-term cross-bad type of stuff. I have identified another cross that has happened and that could lead to some pretty hairy stuff. And just a quick review on short-term price action. You have a micro trend line that is going to offer a decent amount of support should price flip the October candle red, right? And the monthly candle turns red when price is below this line. And this micro, trend it begins around September 21st of this year, so not too long ago. And I think that line will be defended fairly well until Wednesday or Thursday next week. So, again, if you see a scare below the October open candle, which I don't think price will accelerate either to the upside or the downside until Wednesday or Thursday next week, but if it's just above this line, let's say 19.3, I would say it still has a chance to come back up and not use this as resistance and then scream down below 19K, because this will be defended. So just because it goes below here just a little bit like this doesn't mean it can't come back up, because you have a lot of people a lot of traders, not necessarily investor money or hedge fund people, but perhaps hedge fund bots and things that are trading will defend this line. From an investment standpoint and trading standpoint, down here will be defended, but you have an area of micro time frame and short-term time frame bullish defense down there just below the October candle open. So price might make a few sweeps below there and then creep back above in order to stay roughly in the middle between September open and October open. So there is maximum room for whales to piss with price in a volatility type of fashion. And if it's roughly in the middle by Tuesday, well, that only gives them a 3% range. It's probably going to be more than that. But I would imagine price would be somewhere in here to have maximum room for volatility for just to create whale games, essentially, and run the price up into their shorts, then sell on spot, then bring it down another 4%, things to that effect. That is what I'm looking for on short term. So now let's go dive into this cross bat stuff. I've prepared something for you, so let's go ahead and take a look. It seems like if price is going to wiggle down and have another leg, I'm going to give you very specific evidence planned out with exact numbers and exact dates and all that stuff and big arrows pointing to it. And so we can relate the chances of price getting ready to leg down pretty hard here, perhaps not next week. And if it is next week, it probably wouldn't happen until the end of next week, because the high impact economic data, big money will want to mess around before getting a continuation move, because continuation move can't mess around. It's all one direction, right? It's mono-directional. So make sure you follow me on Twitter, Cosasverdes with the number 2 afterward. If you want to check out the Discord, where we have altcoin research geeks and trading geeks alike, the links to that are in the description section of all my videos. And there is a join button right by the description, or right by the subscribe button in all my videos. You can click it. A 90-second quick video will pop up describing what the YouTube tiers provide for you. So let's jump into what I have prepared for you. I'm going to go to the daily chart, and we are going to take a look at a form of cross bad, but I'm specifically going to use the weekly 10 EMA and its interaction, not with price necessarily, but its interaction with and I don't use SMAs very much, so simple moving averages, I don't use them a lot, but I'm going to use it here for the first time in, I don't know, maybe almost ever on my channel. And I'm going to use the 100 simple, not an EMA, simple moving average in addition to the weekly 10 EMA. And I'm going to do this with daily candle chart. Okay. All right. In general, when you see, so again, this is cross bat. All right. And back, it was roughly back here, when people still thought, what's his face? Can't remember, but he got 3 months right in a row of the monthly closure. Plan B, yeah. So a lot of people were still thinking about that, and I edited videos, put music, tried to get people to realize cross bad right around here. And after it finally played out, and after a lot of people made fun of me, then my channel grew quite a bit from all the people who previously made fun of me realized, shit, this was right. So we have something similar going on. And again, in an environment where the stock market is not experiencing V-shaped corrections and then continuing up in a bull run for a 12-year period. It is done. It's completely different now. So just realize any interpretation of what we're going to go over here, just realize it's actually slightly more bearish than all these other crosses that were also bearish, right? Because this was all the other crosses, maybe besides this one and this one, were during prosperity, 12 years. Okay, so let's get it. I'm going to go all the way back to 2011. So the red line is the weekly 10 EMA, and the purple line is the daily 100 simple moving average. Daily 100 simple, weekly 10 EMA. All right, put price back on. This was, nope, this is not far back enough. There you go. All right, back in 2011, the cross happened after the drop initiated, right? So this one happened after. Some of them did. Most of them happened before or right on the money. But it was a 60% drop, and the 60% drop was generally associated with this cross. So, for whatever reason, as this purple line gets closer and closer and closer and closer, even if it hasn't quite, like, I think the drop might have started about there. Yeah, about there. But even when it's close and approaching it, you either have a drop right around, right before it crosses, or a few days after. So you essentially like get a butterfly shape. Price historically drops either. So like the cross point, see how, here, let me zoom way in. Watch this. Check this out. Check it out. Either it crosses, the price drops and tanks right on the money, or a little before, or a little after. Almost like an hourglass or like an infinity signal type of, that's a horrible infinity signal. There you go. Almost like one of those. So it has the habit of dropping, if you imagine the cross from there, boom, boom, like an hourglass. And historically, it literally, it's every time. Price tanks somewhere in that area. Does that make sense? And we're going to go over several of these. All right. So let's put price back on. And there you go. And it had a 60% drop. And again, Bitcoin was much, much, much more volatile back then because it was essentially like a mid cap compared to today's price. All right. And let's go to the next one. In 2013, this happened 6 days before the drop. So I would say the drop started here. It was a 42% drop. This was the top of this was the market. No, that wasn't the market. But, and it got it. So if you look at here, again, remember that hourglass type of deal? Boom, 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 boom. Then the move started right there within that hourglass shape. Okay? And that was a 42% drop in 2013. Cross frick bad. All right. And then this was the 2013 top. Then it exploded up to like 1,200. Absolutely insane. And then, so essentially, after the market cycle top of essentially the first bull run, then you have the bear market beginning right around and it became obvious right around here. This happened 2 days before, almost on the money. The first immediate drop from this point to here. So again, the cross right here happened 2 days before the point where I measured. So that I would say the drop happened here. So count over 1, 2 days. It happened. So the cross happened. No, it should be 2 days after. 2 days after. So the cross happened 2 days after the very beginning of the drop. And again, it's not like the 52% drop. It's not after the 52% drop was complete. It's after the initiation point of a 52% drop. So it crossed during it, right? And it would give you the signal, shit, this is going to be a real big one, if that makes sense, okay? All right, here we go. And let's go to the next one. This was in 2014. This happened, again, I put before. I should have put after. It happened 5 days after the initiation of a 54% drop, not after it already dropped 54%. So again, right here, you have this hourglass shape of this cross. Boom, 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 boom. The initiation started on this side of the hourglass. And again, I have everything clearly labeled. So even though I'm way zoomed in here, I have the dates and stuff listed so you can tell where I am in the Bitcoin chart. So I don't have to keep zooming out. All right, here we go. And we are going to 2015 bear market. All right, so let's take off price. Again, you have, so purple had not yet crossed, but it was getting close. So you have an hourglass shape like this, right? Let's put price back on. Did it start really tanking during in that hourglass? Yes, it did. It did. Take a look. And it's 2015. It made a 40% drop, and that was the last big drop of that market. It was the double bottom. It got the double bottom, right? Here we go. And let's go to another one. All right, so the market cycle top of 2017 hit 20K right there. So this I correctly put after. So again, I'm going to zoom into here, take off price. You got that hourglass on the cross. Put price back on. Did the drop happen during the hourglass? It did, as the purple was approaching red. All right, and it was a 55% drop. All right, this one was on the money, and this was also the weekly 10 going below the weekly 89. All right, so multiple big things were happening here. This drop I felt was rather obvious, and again, if you wanted to look me up on Tradingview, I used to publish ideas. It's locked in time that in September before this, I guessed that it was going to drop to between 2,800 to 3,400 on November 12th exactly. And it dropped to 3,200. So it was one of my best bottom calls I've ever had, and I did it years before I was a YouTuber. And it's locked in history that I made that published that idea either in early October or September of that year. All right, but it was fairly obvious. It was coming for a long, long time, and it's essentially EMA cross bad. It literally makes bots or people or whoever, I don't know what it is, but it associates with big drops. So this one was on the money. It was the capitulation of the last market cycle. Okay. All right, here we go. Got it directly on the money. And here we go. So this was only 6 days difference. Obviously happened within the hourglass. This cross happened before it decided to tank. Drop from here down to there was a 42% drop, and it began within the hourglass. All right, now we're getting closer to time. This was the coronavirus. Okay, coronavirus. Here we go. Got it labeled right there. And it happened. So the same cross, this happened after, but it still happened within the hourglass of the cross. See that? Boom. All right. And guess what? It's happening again. So here, Wyckoff, this one got it pretty much on the money. On the money. Wyckoff. And it's more, I missed this drop. I didn't get it. So shame on me. I was, again, I was convinced because Ethereum and Cardano were being pushed up in a planned fashion by the same group that was getting ready to drop Bitcoin. It emotionally trapped me because they were making all-time highs. And Bitcoin was just squeaking out. It looked like it was going to keep going, but it didn't. It was a lower high and it crashed. But this cross, had I been looking at it, I would have realized, you know what? Maybe I shouldn't be so bullish on Bitcoin and crypto just because Ethereum and Cardano are making all-time highs. I should have smelled a trap. And that's exactly what it was. It was honestly a beautiful trap. And whatever group or groups, coordinated groups did that, they made all sorts of they had to have made I don't know, dozens of millions of dollars from that, perhaps more, maybe in the 3 digits of millions. It was a lot of money those folks made. All right. However, I think my Discord group and I, we think it was planned since 2020 because we saw 2 different practice fractals of Wyckoff, and it looks like they practiced it a year before twice. And then it was practiced, it looks like, multiple times on very small time frames. The exact shape on different time frames. It's pretty cool. But anyway, so it's all but confirmed it was a planned thing. Okay. And it was not mass market psychology. All right, so we got 2021. This was after the 69K top right here, cross bad, and there we go. So this one happened 18 days after, but the drop started on the left side of the hourglass. All right, so, and this one, again, the last big drop we had, 55%, May of this year, 2022, it got it on the money. So let's take a look. This is current price. What is the most likely thing to happen? Look. And remember all the other hourglasses? I kind of made them like this, right? But look at this one. Look at the slope on this one. It's even more negative, which automatically means it's more likely to drop. right? It's got a stronger slope down, which means it's more like the bears are in better control than they were in all the previous ones. Does that make sense? It's a stronger, like it's the hill is steeper, like sledding. Well, most people a lot of people don't live in the north enough to sled, but like skateboarding down a hill or sledding, like steeper hill, you go faster, right? Harder to stop. It's harder to stop. Harder to stop, right? Does it guarantee this one's going to get it? It's going to be a good move or a big move down? It doesn't, but you can't ever guarantee anything until after it's already happened. Look back in time. But that's not a guarantee. That's hindsight. And the idea that the stock market is now in a bear market, and finally politicians in America have admitted the economy is in a recession, even though by definition it's already been in a recession for a little bit. But anyway, so look at that, and let's stick price back on. It's not looking good, and the cross happened right here. So most of those were within 18 days, I think, right? So let's do 18 days. That is October 19th. And what have I said since late September? Go back and watch my videos late September. I've been saying it looks like Bitcoin is going to drop hard. I don't think it's going to be I don't think it will be a green October, but I do think it'll go up or has a strong chance of going up until October 10th through 15th. I've been really focused on those dates for a while because of what's been happening in the chart on the midterm time frame, which I haven't covered today, and I'm not covering today because I've already covered it. This is more of a big scope thing, trying to like show people cross bad. All right. Now, if something is going to change and it's not going to initiate, what are you going to look for? It's really simple. You need 2 weekly closures. So I'm on the daily chart. Just getting above the red line or the weekly 10 isn't going to cut it. It would just be still probabilistically a trap. You need 2 weeks to close the weekly candle above the red line or the weekly 10 until 2 weeks completely close, right? So let's say 1 week has closed above the red line and it's it's Sunday at 7 p.m. and it's just above the line. And it's a 1 hour away from closing. Even at that point, it's still more likely to go down this October or November. It's got to close, 2. And I'm telling you this because weekly closures, a single one, was used specifically below the weekly 55 EMA in late July of 2021 to trap people, right? So a single weekly closure is used by big money to trick other less sophisticated bots and people like you and me. So therefore, I'm saying 2 closures. It's not a trap if you get 2 closures above the weekly 10. And if you get 2 closures, then okay, it's probably, this cross, it has a statistically probable chance of not dropping down. But not until that moment. Now, if you get 1 weekly closure above the weekly 10, and then you're on Wednesday of the next week and it's still above, are the chances getting better and better that Bitcoin won't drop down and that October will be green? Yeah, it gets better. Obviously it's getting better, but it's not crossing that 50% line, right? Like, in soccer or football, or in basketball, halfway court, like it's not past halfway yet, but it's getting closer, but it still hasn't crossed the line until that happens. So even if you see price go right up to 23K, right? It would be silly to go comment on my channel, cross bad, because guess what? That's what people did last time. And I was still right. So the time from a mathematical standpoint that you could say, hey, that's not playing out, is when you get 2 weekly closures. And then you could realize, oh, that was already covered. The idea that if 2 weekly closures, then it probably won't go down. But in this snapshot in time, it's just extremely probable that things are going to have another leg down. It's looking, but things could change. And I gave you the exact thing to look for, the exact EMA, and the exact candle closures, an item that you need to have, you need to see before things change from a 50% perspective, that exact threshold. I really hope this was helpful from a long-term perspective. Get ready for some volatility happening perhaps bi-directional next week. I don't know if continuation will happen, but I think that volatility will begin to expand Wednesday through Friday of next week with a decent chance of it being monodirectional by Friday. I think Wednesday and Thursday will be bidirectional, like no continuation. It just goes up, down, back to the middle, up, down, back to the middle. And I'm guessing that Friday, if volatility continues, that could get monodirectional, either going up to 25K maybe, but more likely going down much below the yearly lows of 17.5. And if Friday closes where it's just in the middle, then I would really look for around the 15th or the beginning of next week to get that continuation move to the downside. So be prepared for the middle of October to be very exciting. Make sure you have the October open line marked off on your chart. Even if you're playing on the 1 minute chart, have it on there, and the September open, because that's going to be key during the whale games, doing bi-directional volatility throughout the week. You got Timified Worldwide. Enjoy the weekend.